Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome the CEO of Soluna Holdings, Mr. John Belizaire, back to the channel. We're going to be talking about Q2 earnings in today's presentation, along with their outlook and strategy going forward. A lot to dissect here, but before we get into it, please take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of Soluna, what you thought about their numbers, and your go forward price target for this company for the back half of 2024. And with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got the CEO back from Soluna Holdings, Mr. John Belizaire. A lot going on at this organization. Anthony, you and I actually brought up some of the bullet point discussion topics for Soluna. It's a long list, John, so we've got a lot to get through today. Before we do, though, we just wanted to welcome you back to the channel and thank you for your time.
Thank you, gentlemen. Always a pleasure to be here. Excited to get through our conversation today. I think it's a lot has changed in the company, so look forward to hearing your questions.
Yeah, it should be a good one. First and foremost, like you say, there's been a lot since we talked last. Can you give us a quick update on the key developments since our last discussion, specifically Dorothy 2 and the funding related to that project?
Oh yeah, absolutely. So Dorothy 2, last time we were talking, we were kind of working still perhaps on getting our lead to close on Dorothy 2. We did close a $30+ million financing for the development of a 48 megawatt Bitcoin hosting facility. So those of you out there that are looking for space and power for your most advanced miners can start talking to our business development folks. D2 will be led by Springlane Capital again. They're one of our key project level financiers. Springlane is going to be putting up the capital for the construction of the project. Soluna will continue to retain the right to also invest our own equity capital in the project. And we can do that up to 49% ownership of the project. And we can do that as over the next 6 months as the project matures, we can deploy capital into it. We also made some changes to the capital structure and waterfall of the project. Essentially what that means is we get more of the cash flows right from the very start of the project. That was a change in structure to the deal that gets more cash coming to the company. And as we invest, of course, that increases as well. The thing that is unique to our structures at the project level with Springlane is after the Springlane fund has gotten all of its money back plus its return, we then share 50-50 the cash flows of the project into perpetuity. And that's true no matter what the ownership or equity investment that we make in the project is. So let's say they put 100% capital into the project. After they've made all their money back plus a return, we will share 50-50 in the project. So the nice thing about it is it gives us lots of flexibility in how we can deploy capital accretively to return profits and then reinvest in future projects. We're planning to do a groundbreaking in the project here this summer, so stay tuned for that. We'll let folks know when we've done that, and I plan to head down there and dig some dirt myself. So stay tuned for that.
Yeah, I'll space out, Bryce.
Yeah.
And so just a couple of points on Dorothy 2. You're saying about the level of ownership in terms of what you could have. I mean, JV accounting suggests that this won't be like directly on your income statement. It'll have to come through as because it's less than 50%. You'll have to account for it slightly differently. So I'm assuming you'll use the non-GAAP methods of updating shareholders as to what it looks like from its true position. We have a similar issue when we've discussed with TerraWolf and their JV at Nautilus site there. They've got a similar structure where it's not quite 50%, and the rules for GAP is you've got to have more than 50% start disclosing it directly.
Right.
And
So,
the second point is, I mean, you talk about hosting, and we know, having previous conversations with you, John, is that your energy costs are some of the lowest in the mining sector at the moment. So I'm assuming the phone's got to be ringing a little bit, potentially with companies interested in taking you up on some of that 48 megawatts, because if you're getting energy at close, I'm going to say close to 3 cents a kilowatt hour, even adding a hosting fee on top of that, it's going to look really good to some of the miners and what they're paying at the moment. I mean, I know 2 of the miners, and one of them is probably the biggest miner in the world, was paying, I think, 6.6 cents with a hosting fee. So I'm sure there's probably, I'm not saying they need to come to you guys, but what I'm saying is there's an opportunity for that service to be utilised with a benefit to both parties.
absolutely. So I want to comment on 2 things. One is, I always forget you're an accountant, Anthony. So yes, we will provide information on the accounting treatment for D2. It will be exactly the same as our other projects. We consolidate those projects because we are fundamentally managing and owning that SPV and operating it. So there's methods for consolidating it, and then we show the split between cash flows in our financials.
Yes.
The second is, marketing D2 has been fun. You're right. There are very few high quality hosting facilities for Bitcoin out there these days, and we're probably one of the few companies that are making them, and making them in a way that positions them very well for what I'd like to call the hyperscale miners, the large miners that are looking to grow their exahash over time, need to have a combination of proprietary owned sites, power and space, and hosting facilities where we believe they can deploy equipment, second generation equipment, perhaps that they're replacing with the latest and greatest miners. There's no reason to just throw those out anymore and try to sell them for, at a song, or just put them in storage where they're essentially just deploying depreciation in your P&L. You can give them a second life by essentially deploying them in a Soluna site. Because of our low power costs, the size of our facility, we can consume thousands of machines and drive the profitability and profitable returns of that equipment. So someone who's, in the high exahash level, if you're not doing that, you're adding new miners, but not increasing your exahash, right? And these days, just given the scale of the Bitcoin network, you want to increase that exahash over time. And one way to do that is to basically give your equipment that you're unplugging a second life by sending it to a Soluna site. So our phones are ringing off the shelf because of that potential concept, because it's all about scale these days in the Bitcoin mining space.
Now, the next project, I would expect you to be phones be ringing even more, because Project Katy, now that you've got the funding sorted for Dorothy 2, I'm assuming everything now turns around to look at the next project in terms of the planning stages. We know ground's still got to be broken at Dorothy 2, but we're now planning the next project. And Project Katy, is looking at a total of 166 megawatts, if I'm led to believe. And that's more focused not on mining, but on actual HPC. So if you could tell us what the plan is with regards to that project, and talk about how what sort of strategy in the sort of like HPC space. We've got a number of miners out there doing different things. We've obviously seen the big announcements this year from Core Scientific, and to be honest with you, if every CEO would be talking about them sort of deals, and the fact there's no requirement to buy any HPCs, the energy is a pass-through cost for the host company. So can you sort of like give us your idea of where you see Project Katy, and is it sort of out the Core Scientific playbook? Because I'm assuming if it's not, there's a lot of money involved in getting these sites built for, tier 3 HPC and AI production.
Absolutely. As I've said before in our sessions together is, we have a lot of flexibility in our business model because we are vertically integrated. We have one company developing sites and getting us access to power and land, and then we have two other companies that can monetize those sites. Initially, we just had the BTC option, and now we've evolved where we can do cloud and co-location or HPC type of business plays. So our current thinking around Katy is, we use the term POR here at Soluna. Our plan of record essentially is to finalize the planning process for Katy, and we've just been getting some positive news from ERCOT around that. Once that is completed, that makes Katy fully green, if you will, on our dashboard. And that will have us focus on the next series of activities. One is we're going to do some work with some specialized consultants to do pre-diligence on the site for HPC partners. Once that's done, we'll hire an EPC and engineering firm that will design a site that's not only AI ready, but also fits within a integrated behind the meter design. The difference between Soluna sites, some of our larger sites, and the sites that you have seen with Core and some of these other folks out there is we're behind the meter. And behind the meter means that our data center is now integrated with a very large utility scale facility. So the combined integration of those things into the grid has to be considered. And we are working on some very unique integrations on the power design, the HVAC, et cetera, such that it doesn't create any sort of, effects on the grid that could be negative. And once we essentially complete that design work, then we will essentially start marketing that site to potential partners that would come in to finance the development of a HPC enterprise class data center, and secondly, also market to potential customers that would fill that facility with GPUs and AI facilities. We're looking to target a substantial portion of Katy for HPC. We don't know if we'll do the 166 for AI or a portion Bitcoin and a portion HPC. HPC takes a lot longer to build than typical Bitcoin, and so we want to make sure we're meeting our requirements for our power partner to consume their curtailment. Remember, we just don't build projects, but we also provide a service to the power plants to eat their wasted energy. So we want to have a facility that can come up fast, start eating that curtailment, and then build out this longer run, very robust facility for HPC that would eat the curtailed energy as well, but also allow us to get access to a very large growing industry and pent-up need for power and capacity for these new computing workloads.
With Texas being the state that it is in terms of weather, demand response,
Right.
I'm assuming it's no provider of HPC hosting could ever commit to sort of like the 5 nines in terms of availability of power. So you are looking at a slightly different model in Texas than maybe you would do in, say, Canada, where the weather's more conducive to getting you that 5 nines for the real hyperscalers who want to have a different type of AI service to the public.
Yeah, so that's a very good point, and I want to comment on Soluna's perspective on that. If you look at the AI lifecycle, you have training, tuning, and inferencing. And actually, you have two other things. One is like after tuning, you have sort of testing, and then you have kind of like this retuning on the inferencing side. If you look at those different elements of the AI lifecycle, not all of them require 5 nines up, right? If you're typing into a chat bot or some other system that is hypercritical, then you might want to see those deployed in more 24/7 facilities
Yeah.
that would support the inferencing side. But when you're taking a model, let's say from Meta, and then you're tuning it to your enterprise data, what you want to have is a specialized facility where your data is protected. You have a good sense of the model itself, so there's transparency in it. You're tuning it to your specific proprietary information, and then you prepare that model and train it to a point where it can apply to that specific application that you might be doing. Maybe that be drug discovery or some sort of manufacturing optimization tool or something like that. That tuning or training process can live in a data center that has less than 5 nines uptime. And I think that that's the innovation that we want to present to the market and bring to the market, that you should be able to take that portion of the compute and place it at renewable energy sites co-located with them, and use that to be the core for all of your training and tuning that you're going to be refreshing, let's say every quarter, every time you generate new data that comes out of that inferencing, and you push it back into the tuning model to upgrade your inferencing platform. That loop or cycle, we think, is the future architecture for AI. And that's the role that we want Soluna data centers to play as we build them out across the country, co-located with renewable projects.
Yeah, it's interesting to hear you talk about the use cases, the drug discovery specifically, John, because I cover a lot of biopharma stocks on the channel as well. And this is a real focal point. So to see the kind of intermingling of these industries is great. Now, in terms of the length of contract that you could potentially secure for one of these HPC deals, we've obviously seen Core come out with a 12-year contract. They actually said that's on the lower end of the spectrum for some of these big AI HPC projects, 5, 10, 15, 20 years. Do you have any idea of kind of contract length, contract design for your situation?
It would be about the same from what we've heard. About 10 to 15 years is the typical. If the site is up and spinning, let's say, and it meets all the requirements for an enterprise customer or a hyperscale, potential customer, if you will, they're typically prepared to do immediately at least 10 years to 15 years on those contracts. And they are very often looking to take the entire site because there's just that much demand right now. And so that's the parameterizations we're seeing. It's the 10 to 15 years. It's the a substantial portion of the site or all of the site. It's a sort of fixed fee for the per kilowatt, if you will, which is sort of like the base fee, plus you pass through power and all sorts of other management services and so forth. And as long as the site meets their requirements from a power, cooling, connectivity, and actually, we used to model that we would have to invest in bringing connectivity to the site. But a lot of hyperscalers, because of their scaled, if you might imagine, relationships with some of the telecom providers out there, they bring their own waves. That's the term for connectivity in the industry, and so that capex, might not be part of our build out, if you will, but that upgrade in connectivity actually opens the door to more sites being built in that area, and that's what they look for. So those are the parameters that we see out there. It's long-term contracts with very creditworthy customers that have some pass-through costs, some direct fixed cost that you can bake into these contracts to essentially bring very low-cost capital to come in and back the site and development. We've also seen contracts that are similar to the CoreWeave contract, where CoreWeave Core Scientific contract, where the customer is actually fronting some of the engineering cost and fronting some of the build out cost as a netting against future revenues, if you will. So they get their money back by getting credits back, but they have almost free capital, some of these hyperscalers. So that's a good way to finance, a portion of the build out of the environment. So I have to tell you, in the last 6 months or so, I have been like connected to a fire hose, learning about everything AI, the use cases, the vertical markets that are looking at this, the contracting structures, what the need is from an infrastructure standpoint, and everything points to a uh, enterprises benefiting from this the most in the next few years. Although enterprises are still sort of dipping their toes in, but when they sort of really wake up, it's like the demand that we're seeing right now is like it pales in comparison. Big AI labs, so companies like the XAIs, the Groks, the the open AIs, et cetera, are deploying a lot of this infrastructure, either directly or through these partners. And then the second thing that's true is that enterprises are really concerned about the sustainability of this technology, the need for renewable energy powered projects or proximity to renewable energy is becoming a really big issue. And they care a lot more about it than most people think, especially if they're large regulated enterprises, government, FinServ, insurance. The ESG element is a really important concern for them.
Yeah, most definitely. Now, you talk about drinking from the fire hose in terms of AI information. I feel like I'm standing at the fire hose right now, John. I've never heard the term "bring your own waves," but the entire AI strategy ecosystem, it feels like a wave just hitting the whole world right now. So it's so interesting to hear you talk through that. And we were saying before we started filming that the AI has just advanced so quickly in our world. It'll be interesting or scary to see where it is in 10, 20 years.
Yeah.
Now, we wanted to pivot back to the Bitcoin mining for a second, because obviously that's a core component of your business as well, John. In terms of the self-mining, the hosting, do you have any specific targets you can share, maybe out till kind of the end of 2025, the next 18 months or so? And then the other question we've been asking every CEO is, do you know your current cost to mine in terms of electricity costs and cash cost?
Let's see. So let's start with the cost to mine a Bitcoin, because I had asked my team to run that for us just before the call. So let's see. So it looks like pre-halving, it was 26K, including direct costs, overhead, G&A, depreciation. So 17,000, including direct costs, O&H, G&A, depreciation, but excluding depreciation and direct costs is about 12,000. Post halving, we reran the number. It's on our self mining, it's 60K, 39K including direct costs, O&H, G&A, and then direct cost electricity, so 26K. So it's between 12K and 26K is what we did.
Great.
Hope
I
that's helpful.
appreciate you breaking down pre and post. And then in terms of the self-mining and the hosting, which you talked about, obviously a big lineup for that service. Do you have targets on kind of year end of 2025?
Yeah, so our business is primarily focused on hosting, and so the D1V project is our primary proprietary mining JV. We will maintain that at the level that it is today and don't have any plans of growing that. But as we build out Katy, we have had some overtures around joint ventures as well on the prop mining side. So we'll see if that applies some growth in the future. But we don't have any plans to grow the proprietary portion of our mining activities.
Sure. No, it makes sense, and appreciate the clarity there. Now, moving along to the Q2 results, we wanted to get your take on some of the highlights, the key takeaways there, and then we can get into some of the details associated with earnings.
Absolutely. So, yeah, with the big headline was our revenue compared to last year. Look, last year we were, I like to describe it as, the ship was listing. We were trying to fill the hole of the ship and rebuild and redesign the ship at the same time, right? And then sort of point it to a new horizon. And you can see the results of that impossible work over the last year. So we announced our Q2 of 9.7 million in the last 3 months, which is a 362% increase compared to the prior year. Our operating loss improved significantly. It was up 3.7 million compared to last year, which is sort of like a 48% reduction from a $7.1 million loss in the same quarter last year. The other big highlight was our adjusted EBITDA. That's the thing we've been tracking. And you see in sort of all of our hero images and our press releases, it ramped to $1.8 million compared to the same quarter last year of a $2 million loss. And it was, an increase of 3.8 million driven by strong revenue growth and also really strong cost discipline. We've been really careful about our costs and optimizing some of our operations throughout our sites and relationship with customers. Also, structuring the deals the right way has helped a lot. And so we've been able to do all of that through the halving. I know there were lots of naysayers out there about what would happen to this company through the halving. And as you can see, we've been more resilient than folks have expected.
Yeah, and with regards to adjusted EBITDA, I'm assuming that's as close as you get to like free cash flow for the companies, just taking out all the
that's right. We take all the stock up and sort of non-cash items to get it a little closer to.
Yeah, I mean that's for me that's the sort of like one of the key metrics, because at the end of the day, if you're not able to manage your bills every month, that's when it becomes a problem. You don't pay your energy, they'll stop providing you. You don't pay the staff, they ain't going to be working next week. So you have to make sure those relevant bills get paid. So it's always a good indicator. Get adjusted. I mean, you can go to the cash flow statement as well and look at operating activities and deduct that from revenues. Another way of looking at it as well. So
yeah,
but yeah, no, it was good to see. I mean, we knew that the recent quarter was going to be effectively red for every miner. In fact, one miner came out with green, which was Hive, and even on their update, it was like they had a net income of 3 million, but beneath that, the next line was saying revaluation of Bitcoin, because IFRS doesn't follow the GAAP rules, and so it had a revaluation minus 18 million. So they had a net, effectively, or 20 million. They had effectively a net loss if you compare every miner. But every miner is expected to have a net loss, especially more so the ones that had the hodl, because the impact of the latest position on valuation of Bitcoin has changed now in GAAP, and you value it at the market price. So
you have to mark to market.
One quarter's up, one quarter's down, and it's just sort of like, and this goes back to that conversation we had earlier in the podcast about predictability, HPC, predictable, Bitcoin mining. You couldn't predict tomorrow's Bitcoin price, never mind next month or next year. It's just the challenge of that environment. And so, before we just go onto the cloud, I mean, I'm assuming you must have seen the change in the conversation with regards to institutional investors and the focus on HPC more so than the sort of like the Bitcoin mining, and probably, as you alluded to, the fact that your self-mining isn't at the moment in your plan to sort of like grow the next 18 months, but you are looking quite clearly at how you can sort of like get the best return from Project Katy in terms of whether it's, get some sort of Bitcoin mining up quickly, or look to utilize that 166 megawatts from a HPC perspective and come out with one of them fantastic updates that we got in June from one of your peer miners.
Yeah,
but if we just in the sort of HPC space, I mean, you've actually got Soluna Cloud, and so you have got you've had a few updates recently, and so really just sort of explain what Soluna Cloud is. How is it? I mean, is it like a sub company of the main company? just explain sort of like what it is. You've raised some funding, and what is that delivering at the moment for the company, please?
Absolutely. So there are three companies. So if you look at Soluna Holdings, and maybe we'll do it on the next Q, we'll start to put out an updated org chart so people understand what I'm talking about. But if you're standing at Soluna Holdings, where I'm the CEO, there are three companies below that. So we're a holding company, and then there are three operating companies below that. Soluna Energy, which is focused on the development and acquisition of sites and land sites, et cetera, for that gets us access to power and land for the two other operating sister companies. Soluna Digital is the company that's focused on Bitcoin and Bitcoin hosting activities, and that has Project Dorothy, Sophie, and to the extent that there's Bitcoin at Katy, will be under that company. And then we created at the beginning or toward the tail end of last year a company called Soluna Cloud. Soluna Cloud's purpose is to essentially build a company that will be focused on both delivering cloud, GPU cloud. Some enterprises don't want to buy machines from HPE or Dell or other OEM providers. They want to just get to modeling. So they want to not invest in infrastructure, just start using compute access, and that GPU as a service is a product that the market looks for. So cloud would be focusing on delivering GPU as a service offerings. And then the second element is co-location or HPC hosting, where we would build facilities that can be contracted or leased by large customers that want to have their own data centers for their AI efforts, where they can manage the cost, manage the access to their proprietary data and information, and make that resource available internally to their different business units to use that for their AI projects. That's what Soluna Cloud is focused on. The company doesn't do all of those things yet. We have been slowly building out the business and its capabilities. So the first step was how do we get into the cloud business as quickly as possible with a partner that reduces risk, gives us access to go-to-market strategy, and allows us to build out that business. That's the partnership we announced with HPE. And in that partnership, we have two things. They supply us with GPUs, and then they deliver it to us as a managed service so that we can provide it to potential enterprise customers, and they can also sell us bare metal, HPE, that we can deploy into upcoming Soluna data centers to continue to provide more cloud capacity. So simply put, it launches us into the cloud business. And then the second thing that the partnership does is that it helps us with go-to-market and customer acquisition as a cloud service provider. So their sales force can sell our GPUs and or our co-location offerings, and they get a commission credit to do so and so forth. So we act essentially as a cloud service provider. And so that's what that partnership was about. It's off to a great start. I have calls with the different key vertical markets I was talking about, sort of health and life sciences, the biotech side, geographically focused companies. We now have touched at least two of their largest systems integration partners that do all of the work. See, most enterprises don't have the expertise to do this AI stuff, so they have to work with partners that bring expertise to get their data ready to go through training, et cetera. And those same partners look to provide the actual compute so we can partner with them. So that has helped us to start ramping up the use of the cluster that we have with HPE. We have an initial 512 GPUs that they made available to us. And then as we use those, we can get more from them and keep growing that business over time. And I think that's off to a great start. It's a great relationship. You're going to see some really cool joint marketing activities in September here with them, where we'll use that to educate enterprises, make resources available to them, and also build demand for the GPU cloud and our co-location facilities. And the nice thing about the partnership is that they share our mission to deliver more sustainable and scalable AI resources to customers. So I hope that gives you a sense of the Soluna Cloud business and what's happening there. We've been hiring new expertise and folks who are coming from the space. You'll see some announcements later this year about new leadership in that company. So lots more to come there.
It's I'm assuming it's less predictable in terms of revenue. So it's like a demand service, so that if it's operating 100% all the time, then you can predict the revenues fairly clearly. But I'm assuming because of that, the nature of demand, it might not be utilized 100% of the time. It might be, sometimes less than 100%. But I'm assuming you're still getting good margins from that business in terms of, with all these extra costs that are being incurred in bringing more teams on, and the fact that it's a shared project.
Yeah. So we estimated. I'll stick with the public information we put out there, that depending on utilization levels, which we assume sort of lower utilizations to be conservative on the ranges, but we range sort of 16 to 26 million per year at the site once it's fully ramped. Over a 3-year period is when we have access to these GPUs. So over the life is sort of 38 to 80 million dollars for this particular cluster. And as we scale that will change. And you're right, the utilization depends on demand and where demand is. What we try to do is to get customers that will at least give us bursts that are, reasonable enough for us to sort of have a minimum level of profitability, and also longer term contracts. So by blending those two together, you get you have the ability to sort of manage the predictability of the revenue and profits in that type of model, if you will. What I have seen, again, all garden hose kind of activity here and learning, is that the bigger the GPU cloud providers, like the Lambdas, to some extent CoreWeaves out there, what they do is they blend these large multi-year contracts that will tend to be lower margin, but lots of cash, with shorter term, higher margin deployments or on-demand deployments, to keep the utilization at a certain level and keep the profits at a certain level, so the business has great runway so they can continue to scale. So we're going to implement a similar playbook as we build out these cloud clusters, because you want to make sure that they're fully utilized.
Just a couple of follow-up questions. One is, which type of GPUs are you using? Are you using the H100s, or are you using the more up-to-date ones that are coming to market now?
We're using H100s. It turns out enterprises, as much as there's a lot of excitement and sizzle and Jensen Huang's presentations around the H200s and the Blackwells and so forth, only the largest companies that are doing foundation model training need that level of firepower. Believe it or not, there's lots of customers just using large banks of A100s to do some of their training and tuning. So we decided to start with sort of middle of the road with the H100, very robust technology. Customers can use it. And of course, CUDA, when you build on CUDA, you can move, throughout the whole chain of chips. So that's what makes NVIDIA so successful. And then as we evolve and grow with the relationship with HPE that we have, and we're also, by the way, working on becoming a NVIDIA CSP. So that would give us access to the latest chips as we grow and as customers show demand for it. So the H200s, the Blackwells, and Bs and B100s and B200s will be available to us through those OEM relationships.
If you weren't the CEO of Soluna Holdings and you had a company that were looking to move into this space now with your knowledge of what you gained over the last year or so in post, what are the sort of like the barriers to, or the challenges or the barriers to entry for a new business they see these big headlines, they think, well, we can do that. Is there much to it? Is it a case of we got some capital, we can buy some land, facilities, get some power? I mean, I'm hearing the power cost, with Bitcoin mining, it needs to be really low. With HPC, there's less power requirement, and maybe the margins are significantly higher in terms of what you're going to get back for the power that you're using. So even though you've only got a small HPC facility, in terms of comparing that to the same level of power used for Bitcoin mining, just no comparison effectively. But what would be the barriers to like a new entrant? If you were a new entrant coming into the market now, what would you see barriers, or do you think actually you could pretty much do the playbook if you had the necessary capital and the whereabouts to do this?
Yeah, that's a very good question. It is not. I would say buyer beware. It is not this business is not a get rich quick business. You can't just wake up one day, drop out of bed, and get into delivering, enterprise class HPC facilities on, and power and land acquisition. It's just, there are a lot of developers out there. It has become a business that are, building out sites and locking up landowners on contracts, and maybe there's access to a substation or not. And when you really dig in, there's a lot that they haven't done, right? There are certain studies that you have to do on the land base, because any customer that's gonna walk into these buildings have to be built to be earthquake proof. They can't be on a major flood zone. Certain thermodynamic requirements that have to occur in the location that they're in because of the high cost that it would take to cool some of this equipment. You have to understand the protocols for deploying these sites and the studies that you have to do. You can't just put on this massive amount of load onto a grid and not expect the grid to have to stay within its safety and compliance levels for this type of stuff. So there's studies that have to be done to ensure this. And that's just front of the meter. If you try to do this behind the meter, like we do, it's even, it's multiple times, the level of complexity that you have to go through to understand how to integrate this facility with a project, design it at the right scale such that the project gets a benefit on the curtailment reduction, and not affect the power price at that particular location. You have to understand how to hedge power, and then you have to have the expertise to execute on designing a building, developing that building, financing that building, operating that building, and then having a whole business development effort to go acquire customers, manage those customers, build out customer success. Like I said,
there's a couple steps to it, eh?
You can't just jump out of bed and just start riding a bike on this stuff. This is hard stuff.
So you think it's going to be a challenge for power mining analysis to have a separate vehicle next time you speak, entering the HPC?
Guys, I do not. You do an excellent job here. You have become experts at doing what you do. Don't try to do what we do. Don't try to do what I do, because
Anthony, I was going to say maybe we should load up some on-demand servers with John, and we'll just make AI bots of us and train them to read the investor decks. We don't even have to show up.
Now,
just before we come into the last couple of questions, I've just got one that it's been on my mind just since we've been talking, and actually it's probably due to the size of Soluna at the moment. I mean,
Yeah.
I look at the market capitalizations of a lot of the mining companies in the space, and you've got about 7 or 8, maybe nine companies there with a valuation of at least $1 billion or above. And then there's a big drop. Then you've got the likes of Bit Digital, just under 400 million, Hive Digital under 400 million. And then you've got another big drop down then to those that are under 100 million. I've received, criticism or questions as to why I'm including some of these smaller miners in my regular articles, in my analysis on the platform. And my response is straightforward. It's like, nearly 3 years ago, Dan Roberts approached me and said he'd like to include Iris Energy in the actual platform. And at the time, they were half an exahash in terms of self-mining. And I said, absolutely. Just provide me the data on a monthly basis, and I'll include your metrics. I didn't sort of question the size of the company or anything like that. Now, Iris Energy, are now are $1 billion plus. They were a $2 billion company, literally a few weeks ago, but they're over $1 billion. So a company can go from in obscurity and get through there. My question is how do the companies is there an opportunity for some of these companies in that bracket where you guys sit, along with a few of the other peer miners, is there an opportunity for those to break out of that group in terms of growth? Are the same opportunities available now that were maybe over the last couple of years? Or is it a case of the only way to grow is to maybe merge some of these companies together and sort of like try and create an entity that has the ability to grow more so because it's the sum of a few parts? And they've got like-minded objectives and things like that. But it's a question I thought I'd ask you guys, because at the end of the day, in terms of market capitalization, you are one of the probably smaller miners in the group that we look at, and rightly so, other miners have been in that group before and have managed to sort of get somewhere. And the question is, how do you see Soluna in that sort of like next 2 to 3 years, and the current space at the moment with regards to the challenge to get out of that group effectively?
Yeah, that's a question that I'm sure is on the mind of lots of companies in the space. Here's our perspective. When it comes to Bitcoin mining, scale will matter. You will have very large miners, and probably you'll see a tremendous amount of consolidation in the space over the next several years. And it will be a very large global scaled operation with thin margins, and a lot of the battle for being sort of in the top will be about how companies go about scaling, both a combination of organic and non-organic growth. And then you have companies that are smaller, like ourselves, who, if you look at sort of our prop mining, it's very small relative to a lot of players out there. But as I said earlier in the call, that's not a focus for us. We really see ourselves as a digital infrastructure company. We have what a lot of companies don't have, and that is the ability to turn our pipeline and build this long-term pipeline that is the foundation for multiple streams of revenue that go well beyond Bitcoin. And we've been talking about that for more than 3 years, that was always our focus. We had a challenging year last year, and now it's great to be back to executing on that strategic plan. And that strategic plan said that in a 3-year period, we would be leveraging this technology and the access to power to go after a much larger space than the Bitcoin mining space. And that is the HPC and AI space and the broader computing space, because our mission as a company really is about making renewable energy the primary source of energy in the world. And so we won't be as focused as perhaps some of our other smaller peers that are true Bitcoin proprietary mining companies, and that's all they are. And they don't have, a range of diversity of technology and business strategy and execution that we have. So they won't probably make it beyond that level, and probably will be part of sort of the big waves of consolidation that will be happening in the space. But we see our destiny is to really become a very large player in the digital enterprise space in what will be probably one of the biggest transformations we've seen in IT in 2 decades. And at the heart of that is energy, infrastructure, and the ability to deploy to the enterprise. That's what we're focused on here at Soluna. And perhaps we'll be on a different chart in 2 to 3 years, Anthony. And you won't be covering us as much on Bitcoin. You'll be covering us more on the HPC side.
Absolutely, absolutely.
Well, luckily for us, we got power in the name of the business. So power or mining analysis, we'll start calling it. I think the first time I ever looked at your website, John, your old mantra was monetize every megawatt, wasn't it?
That's right. Sell every megawatt.
I remember that.
Right.
And you're sticking to your plan. You're monetizing the megawatts. You're behind the meter. They're renewable. You're doing so much right. We're happy and pleased to cover you on the channel. I wanted to give you an opportunity to close out here if you'd like. That was a very good statement you just issued. So I'm not sure if you have any additional comments, but throw it back to you, John.
Well, I always want to say thank you for the time that you guys give me every quarter to talk about our business and share more about what we're doing. I think, you know, people out there who are excited about our business want to know more, and we're very focused on transparency and helping people to do that. I am also proud of what we've accomplished over the past year at Soluna, proud of our team, and I want to thank all of our employees out there who have just done an amazing job of helping us steer the ship in this, you know, incredible path that we're on right now. We're a completely different company, and we have so much more ahead of us. We're growing our pipeline. You know, we're scaling our Bitcoin hosting business, and we've got a lot of exciting things coming on that side. And we're maturing our AI business and learning a lot every day. And it's just great. It's a great place to be, and I jump out of bed every day really excited to come run this company.
Yeah, it's certainly an exciting sector. No shortage of news or change going on in the industry. John, we appreciate your time today. A pleasure as always. Very knowledgeable discussion here. I know I've learned a lot just in the last 60 minutes. You guys, Soluna has a lot of information on their website. I'll leave it linked in the video description below. Go in, take a look at the presentations. They've got some great visuals. If you're still watching the video at this point, make sure you hit the like button, you guys, subscribe to the channel. And if you have questions for John or the team that we didn't address in today's video, they've got an AMA coming up. We can get them in there or add them to our next list. So John, thanks so much for your time. Anthony, always a pleasure. We'll see you guys here tomorrow.